If you look at the market over in Korea, reports showing that students who are still studying take out a loan to invest in semiconductor or AI related companies. People are over optimistic on one particular sector without fundamental support. It's being over leveraged.
Where do you think the most compelling trading opportunities could emerge under different market conditions? Hi Max, nice to meet you.
Nice meeting you.
Can you give a bit of background, where you're coming from, what your objective today, those kind of things?
Sure. Hi everyone. Once again, my name is Max. I'm from 12Invest. We used to cover a lot of companies across Bursa, the US market, and our key objective is to educate the public market in terms of investing in equities specifically.
2026 has been another eventful year for global markets. And looking ahead, which global markets or sectors are you most optimistic about, and what key themes should investor be watching?
Right, 2026 is certainly an eventful year. We have the war on the February 28, which has caused a series of chain events that caused a significant inflation, oil price increase. There is also something more promising, which is the development of AI. So now the key global outlook, I would say, is very volatile in the sense that on one side, we will see the inflation impact kick in the second half of the year, which has already started. And on the other side, we're also seeing very encouraging progress from the AI developments. Now, some of the key places that I would be seeing or I would be looking at in 2026, I would say definitely something AI related. But as you know, not everything AI is investable. We have to look at companies that are AI driven, that are really doing AI. For example, it's not just a company that's doing F&B. Suddenly they tell you tomorrow I'm doing AI. Right? So we are looking at companies that are really driving the future ahead with solid earnings. So there are some of the things that I'm looking at. Secondly, would be the energy sector, which would be the backbone of the AI development that is critical. Although, it's a balance in between the environmental and also enough electricity to supply the AI demand, right? But energy, definitely one of the sector for growth going forward. And last but not least, one of the sector that to hedge against all the risk is gold. If you look at the global level, everyone is racing to become the next US dollar, right? China is trying to get the oil to be traded in yuan specifically, and US is trying to retain that dominant position. Now, how everyone trying to go towards that race is everyone buying gold. Don't forget, many years ago, the fiat currency is backed by gold, and now we are seeing a trend that the deglobalization has happened. Now, central banks, countries, they are going towards gold. So gold is one of the, I would say, commodities that I'm looking at to diversify and de-risk my portfolio currently.
With opportunities often come uncertainties. So what do you see as the biggest risk facing investors today? And where do you think the most compelling trading opportunities could emerge under different market conditions?
Right, I've been investing for 10 years. So far, I've gone through one larger cycle, right, which is the COVID-19 times. So what I observe, and based on the seniors that I've learned from, what I observe is in every single up cycle or down cycle, there's always maximum greed and maximum fear. Now, one of the key risks that we might see in the market is the maximum greed, where everyone is so interested in AI. You like it or you understand it or not, people are investing into AI. I'll give you an example of maximum greed. If you look at the market over in Korea, there are reports showing that students who are still studying, they would take out a loan to leverage on their position to invest in semiconductor or AI related companies. Now, leverage is a dual-edged sword in the sense that during a bull market, yes, you can get extraordinary return, but at the same time, as and when the re-rating happens, when the maximum greed happens, when it comes down, you will also suffer double or maybe triple the losses, or maybe to an extent, it wipes out your whole portfolio, your whole saving. So to me, at any time, any point of time, the risk is always maximum greed or over optimism. So from what we see now, from the recent market retracement, now it's coming back down a little bit. But going forward, I would say that one of the key risks is still people are over optimistic on one particular sector or one particular topic without fundamental support, or it's being over leveraged. This is one of the key risks that we see. But when risk came along, we also see opportunity where when there's a massive sell down, companies that with value, they are truly delivering financial numbers, and also in the form of profit, cash flow and whatnot, and dividend. These are the companies that would also see sell down across the whole market, and this is where the opportunity will come out, right? So for potential investor, long-term investors, now you might face an issue that is very hard to build a position on a certain stock. But when the sell down happens, this is where the opportunity arises, where I believe now we are started to see more rationalized valuation happening across the US market, Malaysian market, and around the world.
Speaking of different market conditions, investor may have either a bullish or bearish view on the markets. Okay, daily leverage certification or DLC enable investor to express either view. For those who are new to the product, what exactly are DLC and what a role they play in investor trading journey?
Right, DLC is a very interesting, I would say it would be an intermediate or advanced product for investors to amplify your investment. So let me give you an example. When you are very bullish onto Nasdaq itself, when you invest into Nasdaq ETF, usually the return is on 1 times. How many percent the ETF has performed? That's your return. But if you are truly bullish about it or truly bearish about it, you can look into derivatives instrument, which are DLC. DLC, let's say a 3 times DLC, assuming that Nasdaq went up by 1%, your DLC, 3 times DLC long, it could go up by 3%. Right? Vice versa, when it comes down 1%, your DLC, the losses that you suffer, it could also go down by 3%. So the risk and reward is equal. So it comes down to how well you understand the underlying instrument. What is underlying instrument? So for example, I'm very bullish on Tesla, but I'm not satisfied with just the share price movement of Tesla. I can go to Tesla DLC on 5 times. That means 1% movement of Tesla equivalent to 5% movement of this instrument. But bear in mind, upside and downside is equivalent, right? But if at the same time, if you are not confident towards a specific stock, index, or whatever underlying asset, you can also go into a short position by purchasing short DLC. It works the opposite way. Let's say if the stock go down by 1%, your DLC will go up by whatever multiple. Let's say 3 times multiple DLC. Let's say Tesla went up by 1%, your short 3 times DLC will go up by 3%. But one of the things I want to highlight is that DLC is a daily product, as the name D suggests, right? It resets on a daily basis. So if you hold it over long term, even though your underlying asset went up, your ultimate return may not be on par exactly with the underlying instrument. So because it's being reset, compounded on a daily basis. So investors who are interested must be wary on this issue alone.
There are various product issuers such as UBS, which offer DLC across a wide range of underlying assets, which include global indices, leading companies and commodities such as gold. When selecting a DLC, what factors should investor consider before deciding which underlying to trade?
Right, that's a very good question. I think ultimately it comes down to how well you understand a particular underlying instrument. For example, we talk about Tesla, we talk about the Nasdaq, we talk about gold as well, right? It depends on how well you understand Tesla itself. If you have the conviction that Tesla itself over the shorter term is going to go up based on your thesis, then you already have a very good basis of the movement direction of a particular underlying asset, which means you are predicting that Tesla may go up, right? On that basis, depends on how well you understand it, then you plan your risk. What is the maximum loss that I can absorb? So for example, if it's a 20% maximum loss in one trade, so let's say on a 3 times, the maximum loss movement on the underlying asset is 7%. 7 times 3 is 21%. So that's the maximum that I can go. So number 1, plan your losses, maximum losses that you can take, and then look for however multiple that you want to go into. If you are really a risk taker, there are UBS products that can go up to 7 times. For example, mini Nasdaq 100 DLC, it can go up to 7 times movement, up, short or long. right? But it's quite volatile based on what we see now. So you need to understand the underlying instrument, and you need to understand the risk profile of yourself, and you plan along the risk and reward. What kind of risk I'm looking at, and what is the cut loss point I must exceed no matter what. DLC is a product that can multiply your returns, but it could also multiply your losses. So when you're looking into one DLC, after understanding the underlying asset, you can go to their website and understand more about the product itself. So for example, you can go to UBS website, you can go to other DLC issuers website, look at their term sheet and understand more on how does it work specifically.
Markets can become highly volatile around earnings announcement, economic data releases, and also geopolitical events. How can investors stay disciplined and manage their emotion during periods of heightened market volatility?
Right. If you look at our recent market, I would say last week, depending on where we are filming today, we are on 18th of July, right? Depending on when you are watching this video. Last week, we have seen a very, very volatile market in the sense that the war of US and Iran has been reignited once again, and the market goes wow, right? So how can an investor position themselves in such a volatile market? My only advice is don't let yourself control yourself. What does that mean? You have set out a trading plan. You let the trading plan control what you do, right? Not because based on emotion, wow, today market is so bearish, I should cut whatever position I have, even though it haven't reached the cut loss point that I'm in. Sometimes it could be hunch. If you have the experience, by all means, right, you can adjust your trading plans. But most of the time, without following a proper trading plan, you will result in very bad kind of investment return, because human can never be fully non-emotional. We can never be fully logical. So my one advice is that if you've come up with a trading plan or an investment plan, stick to it, follow through it until there's a fundamental change in terms of your plan. For example, I'm long in this company, I believe in this company in terms of delivering growth of 25 to 30% every year. But as the earnings come out, for example, IBM, which has a significant downfall, they have revenue growth, but not to investors' expectation. So when their growth slow down, you have to decide whether is this a temporary thing or this has affected my investment thesis, which I initially planned when I go into the long position or short position. So if it defeats your thesis, by all means adjust your investment. Otherwise, follow your trading plan.
For investors who are interested in learning more about daily leverage certificate and staying updated on market opportunity, what educational resources and tools should they look for to support their financial journey?
Right. I think nowadays investing is very different from 5-10 years ago. 5-10 years ago, when we look at a company, we have to go through different platforms, Yahoo, investing.com, and also the annual report of the company, quarter report, earnings conference call and whatnot. Now with the help of AI, gathering information has never been easier. You can go through AI, but what I suggest is after you gather the data, verify it again. And secondly, where you can get information is through the issuer's website. That's the best place that you can learn about a particular DLC, for example, right? So one of the platforms that you can get information from is the whatever trading app you're using. I believe they have sources of news, but again, don't get swayed away by all this news. See whether the news changes your investment thesis initially, right? Secondly, if you want to buy a particular derivative instrument, go to their website. I'm sure they have education videos and also articles to support. Learn about that product. If it's possible, go through a paper trade before you go into an actual trade. I'm sure a lot of different trading apps allows you to do paper trade. Go through paper trade, test out your strategy, then go into the actual trade.